Thanks for stopping by my market report. My name is Mike, and this market report is about the trend line of mortgage rates, what goes on a daily basis impacting mortgage rates every single day, and what we don't get into so much is rate quotes. However, we do get into trends if they're going up or down on any single basis, and kind of give you a kind of a trend of what it might look like for the week and what might impact it for that week as well. If you're looking for rate quotes, I am a loan officer and I do work with a national lender, so we can help you with that. We can give you personalized. There's just too many variables that go into a rate quote and different loan programs out there that it would be a whole different scenario to get into something like that. So please feel free to reach out to me on those bases. We can also answer any questions you might have, whether it's a mortgage programs out there or if you got questions about mortgage rates or real estate. We'd love to be able to help you out with whatever you may need in that category. Um, if you guys are looking to purchase or refinance, please feel free to reach out again. We'd love to be able to help you out with that. We have very competitive rates. We've got great loan programs. And again, we do loans in all 50 states. We help out all sorts of people, from first-time home buyers to people who are moving up or down, people looking for vacation homes. We help our vets out. We help pretty much everybody out. Investors. I work with a lot of real estate investors as well. So without further ado, why don't we jump right into the report? We'll start with our economic data for the day. Today we happen to have the big one, the Bureau of Labor Statistics data for jobs, and that will be for the month of May. So this will be the big report. So we'll start off with that right now, and that's the second one here on the item, which is the non-farm payrolls for the month of May. Last month, if you recall, April was a huge miss. They were expecting, nearly a million, and it comes at 266,000. Now that did get revised slightly higher to 278,000, but still a huge miss. However, this month it was some economists were looking at 650,000. I've been hearing a lot higher numbers, anywhere from 700,000 to a million. A lot of people whisper numbers were much higher than this. However, it came in at 559,000. So it is quite a bit of a miss. However, there are some people who do think it's kind of growing at a modest pace, so it's not as bad as this it shows, and it's better than obviously last month's report. Now, average earnings for the month of May, we had 0.7% growth in the month of April. Forecast was for 0.2% for May. However, it was up 0.5%. Now, this is obviously we're finding this because of labor shortages. We're seeing employers trying to do whatever they can, including higher wages, to entice workers to come back to work. And this is why we're seeing a higher increase in wages and earnings. Average work weeks did slightly go down. Last month it was a pretty high number at 35. However, that did get revised slightly lower at 34.9. They thought before the revision, they thought it would remain unchanged at 35 forecast, and it did remain unchanged, but based on the revised number at 34.9. Now, when we talked about the payrolls, the 559,000 unemployment rate, we had 6.1% back in April, forecasted 5.9%, and it came down to 5.8. So a pretty big drop right there, which is obviously good news that people are coming in. And last but not least, we got factors for the month of April. So the month of March was increased from, I'm sorry about that, the month of March increased from 1.1% to 1.4% due to the revision. However, in the month of April, it slowed down. Forecast count for 0.2%, and it slowed down to 0.6%. So much worse in the month of April. Of course, a lot of this has to do with labor and also materials. We're not getting the supplies that they need, so some of these factories can't go to full production without the materials that they need for it. That's where we're running into issues with our appliances, furniture, phones, autos, because sometimes the microchips aren't available for these, or different parts aren't available for these. Construction for homes, they don't have, the lumber costs are up, but they're not getting the amount of lumber they need to finish the projects that are currently out there, or other materials that they need as well. So we do got a bottleneck in the supply chain, and they're trying to gradually work their way through those things. So let's jump ahead, take a look, see what's on the headline news. Stocks are up this morning, even though the jobs number disappointing from what they're looking at. They're kind of taking somewhat of the bad news as good news type of thing. So they're looking at in the aspect that, okay, the jobs were moderately growing, we're gradually getting back on our feet. However, this means that the Fed will keep its pace or not come back and make changes anytime too soon. So this is how investors are kind of looking at that the Fed won't make any policy changes anytime soon. Now, one of the Fed members, Messer out of Cleveland, did make a comment on wage claims that yet the wage claims, the rise in wage claims yet hasn't gone into the underlying factor for inflation yet. So we haven't yet seen that in our inflationary numbers, and that could be interesting to see coming down the line. Um, if how much impact the inflation data or how much impact the increase in wages will have on our inflation data. Now that will be important because that does make up quite typically the more important. Typically, that will make up the big items in terms of inflation. Goes the underlying inflation numbers is wages. Last but not least, investors are kind of keeping one eye over on infrastructure spending proposals that's been going back and forth between Biden and Congress and trying to get some type of proposal out there. They're trying to get between $1 and $2 trillion infrastructure spending proposal. Between what the Republicans coming out with, what he's coming out with, and we'll have to kind of wait and see how that transpires. Let's move on and take a look, see how rates are doing today. As you can see, when the first news first came out, actually, we're way down here, the 50-day moving average below it, even dipped further down. But however, it did work its way back gradually. This kind of happened just in the last hour or so, but some lenders did come out with pricing and have already been coming out since with improvements in their pricing. So right now we do have better pricing. We're just sitting above the 25-day moving average, and pricing for mortgage rates are a little bit better today compared to what we saw yesterday, especially with that loss. It might even be closer to what we saw on Wednesday. Might be a little bit better than what we saw on Wednesday here, which is obviously good news. But right now, this has been gradually going upwards and having a bit nice rebound for mortgage rates. Now, look at your yields; they're down to 1.57, broke below all those categories that did yesterday when it topped those. Now, since then, we're approaching that technical floor that's been pretty strong. As you see here, we've hit that twice and rebounded the other direction. So again, we'll wait and see how this transpires, but right now it's positive news for mortgage rates that we got some better pricing as a result. All right. Again, if you guys got any questions, please feel free to reach out. I'm here to help out as much best as possible. If you guys like the video, please smash that like button. You certainly help out our channel. I greatly appreciate that as well. Otherwise, I'll see you guys on Monday. You guys have a wonderful day. Enjoy your weekend, and thanks for watching. Bye-bye.